is Susan Hayes-Cullerton, and as Glenn kindly introduced me earlier, I am the Managing Director of Europe. And what I am going to be doing is I am going to be taking you through 3 stocks today that I have come up with from a range of different insights. They're going to be quite different actually to what you've heard already, and I am going to bring that in from a couple of different things that we have been working on in Europe. I always tend to bring a European and a broadly European focus and a little twist of economics, as well as telling you the type of investor that I am, which is what I need to do now. And that is that I personally look for high dividends. I look for long-term investments, and I do like to sell options, particularly to generate my income, generate income through puts, through short puts, for example, through covered calls, etc. So on that note, I am going to get right into this, and I'm going to take you through the first one of the stocks that I'm going to show you. So if I could ask you please to pull up the watch list again there, Glenn, and I'm going to ask you to please pull up Poggi Enterprises. Okay. Now, interesting what that term actually means. The name of the company, it's actually called, it's relating to the idea of being at the apex. It's an architectural services firm. And here is how I came up with it. I basically built a search in Unisearch, right? And I said what I wanted was, and I'm really picky here, I said that I wanted stocks where I was going to get some really good RS. I wanted high RV, I wanted high RT, I wanted a good growth rate, I wanted a low PE ratio, I wanted a lot. So in particular, I am going to take you through one step by step, and then I'm going to hand it over to the guys, just like they've done with me, to take you through how this works. So first of all, in terms of the sectors I mentioned, it's in building services. It's 90% of its revenues come from their architectural glass framing systems and installation services business. You might just pull up value and relative to price. Yeah, okay, you can see that there. So as you can see there, the value is currently 28.89, and in comparison, the price is 23.15. So when I looked at that, I was conscious, of course, that it is an undervalued stock, which is what I wanted as a long-term investor. Then I went on to see that the RV is at 1.23, which is actually the lowest of the RVs that you've heard so far today. But you know, stick with me now, and you'll see where I'm going with this. The relative timing is pretty good. It's a 1.34, and it's been hanging on there for the past while. But in particular, if you could just look at both the growth rate, look at GRT and the PE ratio together. Okay, so if you look at the growth rate and the PE ratio together, the growth rate right now is 8%, and the PE ratio is just 9.08. And this is usually, it's difficult to find the two together, where you can find relative, almost double-digit growing stock, as well as a stock that has got a low PE ratio as well at the same time. Now, I thought in my naivety, I thought I would be the one to have the lowest GPE ratio here today, and I wasn't, because Glenn blew me out of the water when he brought up West Farm. That's why I really had to mention it to you earlier. So GPE is when you look at the growth rate and you divide it by the PE ratio. So that means that you're focusing on fast growing stocks that also have got a good valuation as well. Now, that's not the key reason though why I'm bringing this stock up to you, is that if you go over, let's actually put this on a graph now instead. I think that would be a better idea. Okay. So if you take a look at this stock on a graph, and now if you pull up the dividend yield is distinct to the dividend. Yeah, so if you just pull up the dividend yield there, that would be great. The dividend yield of this stock is, it actually just announced today that it is carrying through, its dividend is going ahead today, is 3.22%, which is the highest of first of all of my 3 stocks, but of all the stocks that you've heard so far today. So this really is a stock where it's interesting when you look into this segment and what's driving it and so on. It's a stock where its sales actually fell less than its profit. In other words, it's making better use of its capital, but particularly what really brings me to the stock is the dividend yield at 3.22%. It's very, very high. It is about 3 times. Actually, you know what? Would it be okay? Could we just go back to the watch list and pull up the full stock analysis report on this? That'd be okay, Glenn? Thank you. And I just want to draw your attention to one key point. If you just come down to the dividend yield, just compare the dividend yield to the average of the VectorVest database. There, next one, there we go. Look at that. So the dividend yield of this is 3.22%, which is almost 3 times that of the average stock in the VectorVest database. And that was particularly what drew me to this. So when I put all of this together onto a watch list, this is the one that came out tops, and I felt that it was worth sharing with you. Over to you guys. What do you think?
Let's go back to the graphs. The stock, as I see it right now, trading in a little bit of a channel if I had support and resistance. From the perspective of that, I would wait and look for the stock to break out of this level of congestion before I pull the trigger on it. Catches my attention that earnings is falling on it, and you know, Steve and I have been, and we always do, talk about earnings is the engine that drives the stock's price higher. But that dividend yield, knowing that the stock does pay a dividend, more of a possibly of a value play, a longer term play, I could wait out even if I own the stock moving sideways, paying that dividend, good dividend, probably good dividend safety as well. If I go to add parameter, dividends, crud. Dividend safety, I got 61. It's above 50. I like that. The earnings growth rate is falling, but I think that there's enough behind it that, again, while being in that level of a channel, breaking out of it, I think I like it from that perspective. It's been a little choppy back and forth between buy, hold, and sell, but that's what I'm looking for. I break out of it, that little bit of a sideways move. Steve?
Give me a little more history. I'm just curious on something real quick. Give me a little bit longer look back.
Let's give you just, when we pull it?
Maybe another, yeah. Just curious.
Okay.
All right, cool. Yeah, so go back to your 1 year. All right, so I like the pick from a dividend standpoint.
Right.
Yeah, and Susan's quite fond of her dividends, I know. From a dividend standpoint and also from a price standpoint in that I still feel you've got some upside here.
Yeah.
You're still on the back of some really dramatic pull down from the COVID collapse. So I like it from those two perspectives. I think you're getting a real good price offering at this level, and I think that you're getting a quality dividend as an added benefit, really. And then if you're well versed in options as she is, she's probably selling puts or something of that nature to generate even more income would be my guess, which would give you overall a very nice take, assuming reasonably good option activity. So from a money generating standpoint, in other words, dividend plus option income, I like the pick.
All right.
Back to you, Susan.
Back to me. Okay, perfect. Thank you both for that indeed. And yeah, I think the just one other point to mention on this stock actually is that it had to move away from servicing high-rise buildings for extremely obvious reasons, and it's now diversifying its the way in which it's working. So I'll be interested to see the way in which this goes. So my next one is Royal Caribbean. And I particularly am interested in this arising from the guest that I had on Fantastic Female Fridays last week. And at the very top of today's show, Andrea posted in, thanks a million, Andrea, for that. She just posted in how she really enjoyed the insights that the CEO of Tour America here in Ireland shared. And during that conversation, Mary pointed out that her sense of the market is that we are moving into an environment where corporate travel will be hit the worst, short-haul travel will be hit or will return the quickest, and then we would be following through to long-term. But when we actually took a look at cruising, that has a whole different ballgame. Now, I've written about Royal Caribbean before in my views because I have been a customer, and I think it is, the business model is absolutely amazing. And just today, there was a breaking news story to say that the industry body that represents all of I'll tell you exactly what it is now. The Cruise Lines International Association, they have committed to testing everybody for coronavirus before they come on ship, before they come on board. So actually, a cruise in the very, very soon, very short-term future is probably going to be one of the safest places to be. And secondly, there is currently tests running in airports around the world where there will be testing before you can board a plane. So when we actually take into consideration all of those points of view, we are potentially looking at a significant amount of pent-up demand. And I'd say if I was to run a poll in the audience, whatever about corporate travel, I think everybody would love to go on holidays in the same way that they used to before. So from that point of view, I do think that there is a lot of merit in this. However, this is the first time today that you're going to hear about a stock with negative earnings. So as you can see there, we have a negative growth rate of 10%. Now, I ordinarily would not at all look at a stock like this. However, I think that this is something where an awful lot of the market has just thrown in the towel. And on the other hand, when we actually look at the RT, we can see that there is, and if we just pull up a graph on that as well, Glenn, I think that would be great. If we pull up the RT on Royal Caribbean, you can see there is that there is an underlying trend of growth in the direction the direction dynamics and magnitude of that stock. Yeah, that's great. Thank you very much. So as you can see, it's broken over 1. Now, I ran an options trade on Carnival back in June, and I got really juicy premiums on it. So therefore, I decided, what if I was to do the same again on Royal Caribbean? So Steve probably knew this was coming here at some stage. Now, I don't know, can we pull up Options Analyzer, Glenn? Is that possible? I
don't know if we have it here.
I don't think we have it installed yet.
Okay, that's fine. So what I'm going to do is I'm just going to tell you where the prices are at the moment. So what I did was that I took a look at, right, so for just back, the graph there is perfect. So what I did was I took a look at 3 things. I took a look at doing an out of the money option, first of all. So imagine if you sold an out of the money put on this stock, right? So currently the price is exactly 67.80, right? So if you were to sell an out of the money, and I mean well out of the money, at $60, the premium right now is $3.56 for that strike in January 2021. That means you would make a return of 5.53% on a stock that is as far out of the money as that. Now, what I did was that then I looked forward and I annualized that figure, and that is a premium of 20% on an annualized basis. On Royal Caribbean, whereby we can see that the momentum is rising, where we are dealing with pent-up demand, and also where you are looking at a company that has really deep pockets and is probably one of the largest, it's not the biggest cruise company in the world, but certainly is one that has got an awful lot of tenacity. So then I thought, well, imagine if we went the other way then, right? Imagine if we went in the money. How about if we went in the money, what would happen then? So I looked at a strike of $70 and I generated a premium, just to go back a moment, a strike price of $70 to expire in February 2021. And what I did was that I took a look at how that would work out, and I saw that the return on that was going to be 15% if the strike price was at $70, which means that it's slightly, in the money, and then that works out at an annualized rate of 55%. Now, if I'm wrong, if I'm still wrong, I could still be generating very significant premiums where I would be hitting at where ultimately the price that I would end up taking on the stock, taking into consideration my premium, is much lower than anything that we've seen since May 2020. So I would consider this quite a risk-adjusted transaction. I would also consider it to be, as you can see there, the stock has pretty much trebled since its lowest point. I think that it's a company that is working really hard to maintain a very loyal customer base. It's got an amazing business model. Obviously, it doesn't have a dividend. It is totally opposite to everything else we've said. It's the first time of my 3, it's the one that is not defensive. Instead, of course, it is cyclical. Somebody, by the way, I saw asking on chat, asking what anti-cyclical was. So anti-cyclical is when you go against the economy. So in this particular case, in my view, this is a really juicy option potential, and one that could, over the long term, from an income point of view, be one that just keeps on giving.
Couple of things. I think this is like the other trade, more from an options basis, but I think this is also a psychological trade. Even though testing may be done, how likely are people really willing to get on a boat with a whole bunch of people, even if how about this? I pay for a boat. You tell me I got a fever and you send me home, I'm gonna be ticked. I'm be really, you gonna give me my money back? And I don't know that, but they're gonna test to make sure, and I got that. All right, but from a psychological standpoint, Are you ready to get back on the boat with a whole bunch of people at this time? Now, a couple things I did see. Coming off of that low, I do have an upward trend on it. So I know that the stock has been beaten up because of COVID. Could that already be built in or baked into the stock? It could be. And could it be on, and it is on the rise. What else catches my attention is that it's also in a little consolidation phase. And let's go see, and Steve is probably gonna give me a pattern for that. Is that flag thing?
No, that's a triangle.
That's a triangle. So I see the upward move. I see the solid line of resistance for each time coming off of that low that the stock's price is hit. I see that relative timing is rising. This hurts me. But it makes sense that earnings per share is going down because they haven't been able to make money with the lack of people coming on the boat. So I'm taking both sides of the fence here, and from the perspective of investing, man, I got to see some people getting on these boats. I got to see some boats back out in the water, and when that happens, could this be a good bottom fishing coming off? Could this be a good low buy right now? Possibly, but you got to get past the mental aspect, the psychological aspect of getting back out on the boats. So that's where I sit right now. I do see the momentum building in after the big decline. That's there. That's evident. I don't know where people's heads are at when getting back on the boat just quite yet. And if you're right, I like this level coming up above $76 to break out above and get some follow through. The stock could be definitely up and away in my beautiful balloon. Ha ha, I sang the song. Fifth Dimension, in case you didn't know. All right, Steve?
All right, so, honestly, it's all a matter of objective. What are we trying to accomplish for me, right? So I see tremendous opportunity here in the long term. I see tremendous opportunity in the long term. I think Susan's got it right. I happen to be a little bit biased towards Norwegian, but I'm a Florida boy, so that's more just kind of the cruise line of choice down there. I've been on all the different cruise lines. I actually really love Royal Caribbean, but who cares about all that, right? I think that if you're going to be thinking in terms of what are some great opportunities and things in which I can buy and hold for several years or longer, I think this is one of those opportunities. I also think there's some airlines out there, like a Love Airlines, who's kind of the most cash flush of all the major airlines, those kinds of things. Similar story here with cruise lines. So if I were going to pick one, this would be on the short list for sure. And then, fortunately, Susan and I know options. So here again, knowing
I don't know options?
Well, yes, you do.
Okay.
But
Wow.
Yeah. Anyway, so be careful what you ask. So, I think in terms of there's some shorter term opportunity here in selling options, vis-a-vis credit spreads, things of that nature. In utilizing some of the higher low action that's going on in the stock. And by the way, with the triangle, if we draw it a little bit more across the highs, you'd have to do a freehand line. That would give you an idea on when this thing may just eventually start to go potentially ballistic. So no, draw it across the highs. See, is that a straight line, really?
Yeah, that's a straight line.
If it is, that's actually very encouraging. This pattern would be called an ascending triangle, in which the lows in the pattern are incrementally getting higher over time. Susan is right. There is pent-up demand to get back on a cruise. I've got it. And there is pent-up demand to buy this stock. That's what that chart is telling you right now.
Okay.
Back to you, Susan.
Perfect, thank you. Yeah, you both make great points there, and I do think there is pent up demand from talking to people in this area, and we took a look. We certainly did take a look at some stocks last week on Fantastic Female Fridays relating to this. We barely touched on the airlines as well, but as I look at this one, possibly as well I could be biased having been a customer of it, and so on like that. But I will be very interested. But I have looked for ages over the summer to be finding the option opportunities from stocks like that, where basically even if the stock trades in a range for quite some time, where the options will just based on the previous volatility anyway, keep on giving. So that's been my rationale for that, and I appreciate both of your points there immensely. So the last one I'm going to do quite quickly, because I'm aware, and probably because of me, that we're a lot later than you guys usually are, and that's Hack. Now, this is an ETF focusing on cybersecurity. So everyone has been talking about technology this year, and of course, anytime I've been on Trending Thursdays and I have been talking to Glenn about what's been happening with the NASDAQ and so on like that, we have all been talking about technology. So what I wanted was find a niche within it. So in here, I found Hack, which is one of the better performing cybersecurity ETFs. As you know, when it comes to looking at an ETF on VectorVest, or indeed at all, we can't look at RV and RS, but we certainly can look at RT. Just to give you a tiny little bit of background to this, the expense ratio is pretty high at 0.6%, but it's because of its niche. It has got a small company tilt, small cap tilt. It's also 78% based in the US, and then outside of there. And the spending on cybersecurity has multiplied by 35 in the past 13 years. So if we just get in now and we just take a look at a couple of things to do with the stock. Number one is that I just want to take you to the RT and the CI and the dividend yield. So if we could just pull up all of those on a graph, that would be great.
Oh, okay.
And thank you. So the RT, yeah. RT, yeah. RT, CI. Sorry, I keep doing this to you. Apologies. I'm pretty predictable. These three are what I look at every single time. Yeah. So RT and the dividend yield as well. The DY. Yeah, DY. Okay. Perfect. Yeah, thank you. So in the case you can see here for the dividend yield within this is 1.32%, which again, as you know, now I did look at the options on this, but while it's actually, there's quite a lot of volume for quite a niche area of the market, it wasn't offering anywhere close to the options that I've mentioned earlier on, and I wouldn't expect it to, since you haven't got the same volatility. The CI is above 1, it's at 1.15, so as you can see, we've got some long-term ability there to withstand severe and lengthy price declines. And then also, as you can see there, the RT is now moving, it's been moving higher. Like, I was wondering whether to do some stocks like Zoom and so on like that have really been thriving in the technology area over the last while, looking at Slack, looking at various other different companies. But you know what, they all need the same thing. They all need the security underpinning them, and that was my reason for choosing this particular ETF. I think it's one to watch.
Over the last year, I like it. I'm actually going to put in the last 3 months. Still higher than it was 3 months ago. Stock's price moving. It got hit, that's fine, but I like, because the CI is above the value of 1. It's going to show the resiliency to keep moving up. And another bullish thing going here, that's a little bit of a shooting star pattern or a gravestone doji without follow through. Stock's price gapped up today, moving up higher. RT is ticking up higher. So from that perspective, I like this and Steve likes these pullback trades. I'm looking at this as a pullback trade. Most recently, over the last 3 months, good level of support. Man, in that zone, thereabouts, even going down to here. But I'm going to use this. Good level of support, take off the last close, bounce off, stock's price moving. I'd like to see it take out the high, but I'm not going to say not to get into it now, because RT is definitely telling me that the stock is back in an uptrend. And if I go back in time, as the RT has been above 1, the stock has been in an uptrend, and that could be the start of it all over again. So I do like the trade, whether it's over the last 8 months, last 1 year, last 3 months. Looking back, the stock is definitely moving from the bottom left to the top right and moving higher. That's what you're looking for. Steve?
Sure. So trader perspective, this is my favorite one of yours, Susan, from the trading perspective. This is a different perspective for me, I guess. So I really like the entry here, actually today, or taking it again tomorrow on a higher open. I think you stand a reasonably good chance. It's just passed through resistance. Yesterday was the acid test for that. It appeared that resistance was going to hold. It did not. This market is convicted to the upside. I like the pick. I like it on the short term especially. I like taking half the trade off at the prior high. So I would consider going all in right now. Half the trade comes off at whatever that high water mark is. Glenn, if you could help. And then let the other half ride.
51.19, good target, as Steve just said, to take half off the
So
table.
that's the trader perspective. The investor, just buy it.
All right. Susan, thank you for your picks, number one. Thank you even more so for your insight, number two. We covered a lot today, and I think that this is one of the first times that we've had this deep, detailed insight. And I think that the people who won out the most were the people that were here in the chat today. So thank you for being here. Steve, thank you for being here. Joey, do you have a winner for the mug?
We did. They posted it in the.
Oh, they posted it in the chat already. Who won the mug?
Yeah, I forget his name. Something Cockrell.
All right, well, somebody won the mug. All right, and whoever won, I'm not just,
Aaron Cockrell.
thank you. Aaron Cottrell won the mug. Thank you for all typing in to win the mug. If you look down below this video, you will see your opportunity to purchase the mug as far as merchandise. Don't forget, on the 19th of October, we have our 3-day summit, and my two guests that were here on the panel today will be there presenting as well. Do not forget to subscribe to the channel if you haven't already, especially if you liked it. And if you like the content that we gave today, make sure you hit the like button. And with that, folks, and for the trial, if you are not a subscriber, we are inviting you to take advantage of everything that we've shown here. There's nothing that's, with a trial, you get access to everything that we showed here to be able to do it on your own. It's www.vectorvest.com/YT, Yankee Tango. Click that, 99 cents, take it. We want to see how many of you from the YouTube channel have been moved to at least take a trial, all right? Susan, always glad to have you, and I will have you back soon on Trending Thursday. Always like when you're there. Steve, thank you for being here.
You're welcome. Susan's the best.
Susan is awesome. And Joey, you're okay. Thank you for being here to make sure that we look good. With that, folks, adios, arrivederci, ciao, au revoir,
Bye, Susan.
sayonara, aloha, salam, shalom, namaste, adios to everybody. And I don't know how do you say bye in Irish.
Bye.
Slán.
Slow?
Oh, there it is.
Slán. So you say sláncha when you're going to raise a glass, and then you say slán, which is, that's what it is for goodbye.
Sloan. So there you go. Thank you all for being here. We're out of here.
Bye, Susan.
Bye, Susan.
Bye.
Yeah.